Good morning, all. Ira Epstein of Linn Associates with your morning flash update for this Friday, the 4th of June, 2021, about 8:15 a.m. So before we even look at the markets, let's go to the all-important data and the monthly jobs number. First off, it was a miss. The market was looking for 670,000. I'm giving a guesstimate there as to what I had seen. I was watching everybody guessing on TV before the number came out on CNBC. Rick Santelli, you did it, buddy. 559,000 was 550,000 was his number. Came in at 559. He also pegged the unemployment rate at 5.8%, and that's where it came out. He hit the numbers. Go play the lottery today. When you look at the revision, I told you there could be one. It's not large. So what does this do? Well, you've got to go through the data, and you can see that the average hourly earnings did go up a half a percentage point month over month and up to $30.33. You can see the jump happen in the private payrolls, and the government went up minor. So as I'm looking at the report, my point is this is a sweet spot report. It will allow the Fed to keep talking about some of the presidents, the governors there, saying we should start talking about tapering, but they don't have to. Fed Chair Powell can say nothing. Wait until more data comes in through the summer. We know that a number of states, about 24, 25 of them, starting June 10th, between then and mid-July, end their government $300 a week program, which should also bring more people back to the labor force. As that snowball gets going, then the talks can begin. So I'm really not looking at this report as a negative. So let's see how the market's looking at it. Negative being there's no need to start the tapering talk at the next Fed meeting. In other words, interest rates don't have to go up. And you're seeing that in the bonds and notes. They're viewing it the way that I am. Here's the market giving you a jump in the futures, which means rates are lower. The stock market not roaring, but up across the board. The metals that got hit, especially the gold market and silver, saying, oh, these higher rates hurt us, they're coming roaring back. Copper likes the data, up 7 cents. So even though China, and we've seen that the Chinese buying, because of the new People's Bank of China rules on banks, they don't allow bank customers to speculate on copper, one of the favorite assets there. And we saw that with the London Metal Exchange. The premium that they're getting for it is down to lows we haven't seen in a long period of time. The market's anticipating that these type of reports bring the U.S. economy back up. In turn, it'll help the Europeans make decisions on their monetary policy, and away you go. I write about all this in today's report. I have written one of the longer reports I've done in a year for the 11:30 update for my full subscribers. And I even got reports in there on emerging markets, and I'm showing you how many of them are raising rates, what are they doing. The dollar giving back a chunk of yesterday's gain. You've just pulled the rug out, not from under it, but you've pulled the rug out that you don't have to begin the talking of tapering so fast. The Fed can do it, they can maneuver around, but you're not going to get that talk, which doesn't hurt things. That's why I call this a sweet spot report. It's what I wanted. I didn't want to see a report with a 6 in front of it. I'm not scared of a 5. A 4 might have been a bad report, and that's what I've been writing during the week. It fit right in with what I was looking for. We're also going to get factory orders. That comes out in about 35, 40 minutes. We'll see what that is going to offer us. So for those of you that get my morning subscriber video, the markets that I had you in still look fine to me at this point in time. For my full subscribers, I've had a lot of people out of the market this week, intentionally, by design. I don't stand in front of a bullet train coming down the track. As it turns out, the reaction to the report, as I said, right in the sweet spot. Nothing radical, that not enough jobs. Nothing radical, too many jobs. You didn't get either of that. This is going to be a great week for the weekend charts when I review all those. And on the weekends, what I do in my subscription report, I take the weekly charts for the long term and show you what's there. The long term, we have a lot of positions on if you're following what I've been saying through that. I cover all these markets for the futures traders. When I do that, I also bring you the news in the morning. excuse me, like I do here, but a lot more news that we get through there. How do you get this? It's simple. We offer a sweetheart deal to get you going. Go to our website under the word research. Everything's explained there. Choking here. Excuse me. You have a great morning. If I can get through the choking, I'll go to my other updates. Take care.